Welcome to The Real Money Show, the number 18778 Silver, the website, guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correia. We are recording the show on Thursday, October 23rd. And what a week it has been in the market. We hit a peak last week of about $54 an ounce on silver. Gold was trading north of $4,200, I believe. Big up days in the market. Big up days mean you can have big down days in the market. A little bit of worry. Jerry, the memes were all just like $49 2 weeks ago. $49 this week, and it was just the agony and the ecstasy of the whole thing. However,
sell Mortimers.
Yes, sell Mortimer. However, we have a little mic check, and JP Morgan came out today. Last week we talked about Jamie Dimon talking about gold going much, much higher from here. Well, now JP Morgan, the firm, is saying that gold will reach $8,000 in the next 3 years. So by 2028, gold will be trading at $8,000 an ounce. That is a big, big call, because usually you're talking about banks being very conservative. They're usually just ahead of where the market is, right? Gold gets to 4,000. They say, oh, we see 4,200 in the next 10 months, that sort of thing. So they're always very, very conservative. All of a sudden they come out, they say, yep, we see 8,000 within 3 years. That is over 100% gain in the gold market in the next 3 years. And that's not including what could happen in the silver market. Because if the silver market maintained, 70 to 1 ratio, that would put silver just above $100 an ounce. And if silver did any better than a 70 to 1 ratio, you're looking at getting more than just one-time gain in the market. So, Jerry, what say you on the news of JP Morgan looking for a doubling of the gold price in the next 3 years?
Yeah, you know what? We saw Jamie Dimon capitulate on the top side. Many banks are doing that as well after some major adjustments from top banks, Goldman Sachs, Morgan Stanley, all adjusting for winter gold and even winter silver. Adjustments in portfolios are all happening because we're noticing a deglobalization happening. This is what we're transitioning towards, a healthier, a rebalancing, a reshifting. Mercantilism is here, and it's flushing out all of the paper that has ever been, shored up, the M2 money supply. We're in for it. If we look forward, we're heading into, the week of Federal Reserve rate cuts next Wednesday. We're also heading into the Bank of Canada next Wednesday at 10 a.m. They're crushing our currencies. They're cutting interest rates, and these are emergency cuts, Jeremy. They're not cutting because they killed inflation, like they won. Hooray, we get to cut interest rates. No, you could borrow more money, but everything's going to continue to rise and skyrocket.
I feel like inflation is a self-inflicted wound here in Canada, because all they have to do is lower some taxes and you could lower inflation, right? I don't think it would be the hardest thing in the world, but...
we're not, the consumers today we're really not convinced. Canadians alike, Americans as well, we're just not convinced. Everyday costs, groceries, insurance costs, housing, mortgage costs. And these, remember what Larry Summers wrote in his paper, was they're omitting the mortgage costs when they calculate the CPI. All of these costs remain painfully high. We're seeing many mom and pops, who bought gold and silver back in 2021, regrettably have to sell their gold and silver. Retail is somewhat slowed down quite a bit in the precious metal space, but we look abroad. We're seeing the commercials, we're seeing the industrials, countries stacking, and they're doing something. And you know what? They're preparing to, for the solution, which is going to be, I think, deflationary in the end of it all.
The retail market is very Jekyll and Hyde-like. You get these reports around the world, Bullion Star in Singapore, lineups around the corner. Australia, lineups around the corner. I saw one for Australia that was saying that they're looking to they will pay you 13% over spot to get the physical. And I'm like having a little bit of a spat with someone online saying, I wonder how long Costco is going to keep selling gold and silver. And rather, what I mean by that is how long wholesalers are going to be willing to sell to Costco at bare minimum prices, right? So that they can ration out gold to people when these other dealers are completely out. And so, yeah, there's this like spastic nature to the market. You know, the LBMA is empty. They managed to get a couple million ounces and push as much of the market down as possible. But structurally, it's still empty.
Yes.
And it's only another matter of time before they're back to where they were a week ago, which is that they are painfully low on metals, and some suggest they're 4 months away from not having any product. We listen to Vince Lancy. He likes to say the LBMA is dead.
And the LBMA
Meanwhile, the if you want to lease gold and silver out of ETFs, you're going to pay an arm and a leg to do so. So they don't want you lending. They don't have the product to lend. And then you have, there's people who are forced to sell. There's always going to be people who are like, oh, I've hit my target. It's time for me to leave. But then I think there's more people who want to get in on the market, and there's not really a lot of product around. Overall, they say it's dislocated, right? Meaning, well, there's plenty of it out there. It's just not the right type of product in the right place. Well, how long does that last for? It's not like you can get 20 million ounces of silver over to London and have it refined to the proper LBMA type bars that they need, right? And then there's the repo, and then there's the U.S. debt hit 38 trillion. And then there's the word on the street is they're going to lower interest rates, that they're going to stop quantitative tightening. So inflation's going to rear its ugly head. I know I said it's mostly a government thing, but in Canada it is. It's like, just drop the carbon tax already. Just drop it. People are suffering, It's so silly.
With their cold, dead hands, they're going to hang on to that until the very end.
Sociopaths.
Canada will not relent, yes.
Sociopaths.
But the LBMA is dead. Vince Lancy commented on the Financial Times. They had a recent post that the LBMA, in a last-ditch effort, is wanting to start a futures exchange. But Vince Lancy just puts that one to rest, really honing in on the challenge at the LBMA. It's all about poor timing. The infrastructure is gone. You have the physical exchanges from China, Dubai, India, even the U.S. The LBMA is just way too late, as they've been laying back for years. The franchise has been under attack. It tried to protect itself and the West's monetary wealth, but it's too late. Instead of solidifying its hold when it was in a position of strength, it chases innovation. In a deglobalized market, though, he writes, Vince Lancy, that prizes local custody again. We're looking for transparency again and sovereign control. Efforts to re-centralize trading are unlikely to reverse the decentralization now. It's moved on. We're seeing the vaults around the world, exchanges around the world moving towards physical, and with new technologies, even blockchaining the gold and keeping it as collateral. And there was a huge collateral news in the silver markets that just passed this week.
The number 18778 silver, the website guildhallwealth.com. At Guildhall, we focus on actual physical precious metals, especially in registered accounts. This is the safest way to acquire physical gold and silver and get exposure to the market within registered accounts, because the physical product is held in a vault facility outside the banking system. You own it. It's fully allocated to you. It's segregated from all other holdings at the vault. That means there's no counterparty risk. And this is a great way to do it. So you can give us a call. We'll show you how to do it. If you're just tuning in, JP Morgan has forecasted $8,000 gold within the next 3 years. So if you've been thinking about getting into the gold market and you've been wondering, well, is that it? Is 4,100, 4,200, is that the peak in the market? Well, JP Morgan, the enemy of my enemy and the enemy of the enemy, is calling for 8,000, and they know where this market's headed.
Oh, they certainly do. And, we are watching money flow, following the smart money, allocating into physical precious metals has been the game, the plan sought out by the BRICS. We saw this, years ago when the BRICS central banks, countries such as Brazil, Russia, India, China, South Africa, and all across the world now loading up on gold, even physical silver from Russia, because of the uncertainty and the volatility of geopolitical and macroeconomic on those fronts. But it was really the trend of de-dollarization. When you sanction a country and you kick them off the old SWIFT system, this can happen to you as well. You are no longer free and clear. You're no longer neutral. This is the time now for us to convert out of fiat currencies. The loonie has lost over 96% of its value, purchasing power, since 1915. And in fact, all fiat currencies, doesn't matter which one you are looking at, Swiss franc, Japanese yen, they are all rapidly declining, especially versus gold and silver, due to government fiscal mismanagement, monetary mismanagement, and governments all over the world. Their only strategy is to increase that money supply, watch that M2, because coming down the pike is going to be interest rate cuts, could lead to slashes, because you know what? The overnight repo market is on fire once again. Headlines all over the news from Reuters, even Seeking Alpha is talking about this. So when that black swan hits, we're going to hit into some volatility, but that will introduce the solution. And we all know what the solution is. Those gold and silver reserves that are decoupled away from the madness of this financial situation. It's away from the madness of overprinting currencies. That M2 money supply, watch those ratios. Your gold and silver is a savior, and it's also going to make you uber wealthy.
The number, 18778-SILVER, the website, guildhallwealth.com to get access to your physical gold and silver within your registered account, or simply buy it direct. You can go to our e-store at guildhallpreciousmetals.com, and you can get a tube of silver maples, your first ounce of gold, some 10-ounce bars. We've got it all. Inventory is pretty good. Huge news. Not sure if I mentioned it in the first segment, but JP Morgan's calling for $8,000 gold within the next 3 years. Treasury Secretary Bessent says, this just came out a couple hours ago, America's golden age is underway and the best is yet to come. We are seeing structural issues in the silver market and gold market, deliveries left, right, and center, going through the roof. Lots of issues going on. There's so much information happening in the gold and silver market. It's actually tough to keep an eye on. But there is a slow rolling squeeze, it seems like. The physical market's taking over. There's massive deliveries off the COMEX. They ran out of product effectively last week in the LBMA. They managed to get promise or delivery of 2 million ounces. The market got squeezed by a bunch of paper. And it reacted very quickly. Now we're about a week out from the 7% slam in the market, and we've recovered back up to $49 plus in silver. We're back up into the 41 range, I believe, in gold. So
it's a healthy pullback.
It's been quite resilient.
You know what? Buoyant, resilient, buoyant. Love them both.
And now, one area in the world where we're seeing a lot of news coming out about the precious metals is India. My understanding is they had a record-breaking demand for gold and silver for Diwali, and let's get updated on that, Jerry.
It's been, if you look at the demand for silver and gold, and it's just been a massive influx of silver heading out of the west and east. Worlds know the world around the world globally. We know that the demand is up for industries, from solar panels to electronics to microplating to radars, you name it. Now AI and data centers. The silver demand has outpaced supply since 2021 by 678 million ounces, largely due to industrial demand, of course. Yet the timing and scale of India's purchases acted as the catalyst this week. How was your Diwali? Hope everyone had a good Diwali if you celebrated. It was a season that we saw that the Indian citizens turned from gold, from historic highs, to a cheaper metal. But this exacerbated the problem. It triggered, quite a convergence of events that pushed the market to the brink in India. The India's Diwali season it led to one of the largest metals refineries. Actually, India's largest metals refinery just ran out of silver for the first time in history. And this is historic. And we're seeing this happening. And this is what one writer called India's coup in the silver market. And I reported this back in last year. I don't know if you recall, Jeremy, but last year, July 2024, I brought this to the table, and I thought this was a telltale sign, these trends that we have to follow, of what will impact the market. This was from Metals Focus back in July last year. In a surprise move, India cuts import duty on precious metals by 9%. They want that metal to come in. They want the metal to come in through arbitrage. When you have higher prices overseas and you have a low price, an artificial paper price in North America, what do? You buy up the physical in North America and you ship it eastbound towards India, into China, into Dubai. But it's a vacuuming. And last year, silver reported the largest import increase of silver by India, 314% year over year. It's just in world record pace. And there was a funny quote, Jeremy. It was Sir Dave Ramsden, the Bank of England deputy governor. He says, getting into the bank this morning was a bit trickier because there was a lorry in the bullion yard. So there was a truck parked in front of the Bank of England, picking up some bullion. So this is a big sign that this is a silver coup, as one writer called. We knew this. We knew the impact of the silver market will have in the market. We've always called silver the Achilles heel to a corrupt financial situation market. Your thoughts on all these, India?
Well, I think that globally, there's a demand for the physical, that we're moving from an age where virtual is not what people want. They want it in their hands. They've hit the pendulum peak apex of what virtual looks like. And now it's about having the real stuff. And we knew that, by the way, going back to, I would say, 2011, post 2011, 2012, as the paper market slammed from $48 and eventually hitting, what was it, the low in the market once it finally hit a couple years later was around, I guess, $11 or something like that.
Yeah.
We knew back then people are going to want the physical. They're sick of these paper slams. You mentioned corruption. Ron Paul said gold is honest money, and so it's disliked by dishonest men. The slam in the market in the past week was perpetrated by the dishonest players. The fact that it's been resilient to that, at least thus far, again, it's October 23rd, it's only been a week, tells you a lot about their power and how it's not having the effect it had, again, going back to 2011 kind of thing. So then when you just connect all the dots and add up all the entities around the world, like the Shanghai Gold Exchange, I saw a number that just made my head spin about how much investment they've had in gold that have come into that exchange, that products going into the exchange in the US, the COMEX, that we used to call the CRIMEX, and now it's going in and leaving just like it is in China, but it's not leaving the country. Now you have India add that to the mix. They're doing essentially the same. They're saying, you want to lease this product to ship it somewhere? Good luck. We're gonna charge you ridiculous rates to make you want to do that. So it all just adds up to the deficit that you see in the market. There's less product coming out of the ground than what's being used. And the demand for the metal, especially in silver, comes from both industrial and monetary. It's the people's metal, just as gold is the metal of kings. And so we understand that gold is being revalued and gold is being coveted. and that the forces and the narratives that have been pushed on you since 1971, telling you gold is a pet rock and it's a relic and it doesn't pay a dividend and we have no use for it and you can't live in it and you can't eat it and it's the worst thing that ever came across because you need to pay attention to me, the wizard of economy. Their words are not having the same effect, and their power to play in the paper is having even less effect. And then you have a capitulation of the banks that have participated in it, like JP Morgan, who says, well, we think it's going to 8,000 in the next 3 years, which is 100%. That's basically, do you want to sign up for 30% a year? Because you're not getting that in your GIC. And we're not, now here's a narrative, okay? Frank Giustra mentioned this, but it was so obvious. Right before the market slammed, all of these Bitcoiners came out and said, you need to sell your gold and buy Bitcoin. And then you see the clips
influx
of Bill Maher with Aaron Sorkin and Mark Cuban, and they're mentioning gold only to chastise it. And you're thinking to yourself, you don't have to mention it. You don't have to talk about it at all. You could talk about anything you want, but you've chosen to talk about gold only to chastise it and say you shouldn't own it here at the all-time high, right? Billionaires and people of the mainstream and whatever deep state swamp you came from. Those are narrative deployments aimed at stopping you from owning it. How different is that from it's a relic, it's a pet rock? Well, guess what? This pet rock, by the way, is up 1,000% in 20 years if you held it in an RSP. How'd you like to have them apples in your RSP?
Absolutely.
Right? So guess what? $38 trillion in debt, a Federal Reserve that looks that it's going to stop quantitative tightening, that interest rates are probably going to come down, which means Orange Man Bad is going to get his way again, right? Wink, wink, golden age. And that's it. It's if you don't see the writing on the wall of what's happening, and it's an opportunity here to get back so much of what we've lost. You know, our debt to GDP in Canada, household debt to GDP, is the largest in the world.
That's right.
We're the most indebted nation per household than anybody. Now, in Saudi Arabia, okay, they have one commodity.
What's that?
And they don't pay income tax, right? And they get everything. And we're sitting here like a small African country run by an authoritarian or a king, okay, where we don't get to unleash any of our resources. We don't get to unleash our oil, our water, our gold and silver and copper and nickel and any of it. It stays in the ground. We're going to subsidize EV vehicles that nobody wants. And when the car companies decide to move south because they can do whatever they want there, we say it's not our prime minister's fault. It's Orange Man's fault. It's his fault. It's not our fault that we put ideology and just spent all our money. If you added up all of the money that we've just wasted and wasted and wasted, okay?
It's those tariffs. It's those tariffs.
Forget Carney having meeting with his Brookfield partners in New York and London and refusing to provide information about it, right? What do you think he's here to do? He's here to profit and make money for them.
Always has.
Where is your profit? You, the listener, where is your profit? Where have things gotten better for you? The only bright spot in many respects has been your gold holdings, has been your silver holdings, because they're up over 50% this year.
And the revaluation is coming, Jeremy. The revaluation of gold and silver are coming. This is a revolutionary time. This is a silver coup, the silver stock out that you can buy into. You want to give us a call, 1-8778-SILVER, and the website guildhallwealth.com. And in closing of this segment, Jeremy, India just making moves left, right, and center. the big takeaway this week, if you hadn't seen yet, was out of India. Major news: India will formally allow silver to be used as bank reserves. Reserve Bank of India is now going to be holding the reserves in their reserves in physical silver along with physical gold. Tier 1 asset.
High quality liquid asset?
High quality HQLA. So starting April 2026, the India's Reserve Bank will allow silver to serve as collateral for bank loans. Under bold new rules, each individual can pledge up to 10 kilos of silver jewelry per loan compared to just 1 kilo of gold. Loans up to $3,000 US require no traditional credit check, unleashing silver as an active circulating capital, not just save wealth. Now, this is it. It's not just this is what we're seeing, a crisscrossing. The industrial role, moving right back to where it once was, the remonetization of silver. It's being unleashed. It is HQLA. It is tier 1 capital in our eyes. Now, the banks out there, are you going to view silver and gold on someone reserves here in Canada good enough for a down payment, you think, Jeremy?
I think you're going to get easier and easier to make your $2,000 silver down payment a dream. The number 18778 silver and the website guildhallwealth.com to own physical gold and silver. Only globally recognized products of the highest quality and highest liquidity, meaning the easiest to sell here or anywhere around the world. That's the type of product we sell, only quality. Give us a call at 18778 silver and the website guildhallwealth.com. Conspiracy theory incoming.
Uh-oh,
The
tinfoil hat.
The Louvre was an inside job.
The Louvre?
Yeah, the stealing of jewelry when they converted the holding of those pieces from behind bulletproof glass to behind regular glass in the last couple years tells you absolutely everything you need to know. I don't know who wants to steal these treasures. I don't know what they're for, but they're certainly not trying to steal lab-grown diamonds.
Absolutely not.
So here's my hot take on what's going on in the market and what I believe is going to happen. First of all, lab-growns are done. They're done. Yes, there's some economic reasons for people to want to buy them. There was a jewelry show recently in Hong Kong where one of the exhibitors said, pay for the gold, the lab-grown diamonds are free. Okay? That's an anecdote. Another anecdote is I saw this funny meme. It was from Wolf of Wall Street when they're all partying on the yacht, and then it's like, what's going on with like the storm going on when the yacht is in the storm? And basically it was about jewelers where their cost to buy gold a year ago was, $2,300 and now it's $4,000. So I was talking to our jeweler and I said, so what happens when gold is trading at 8,000, as JP Morgan says it's going to, or 10,000, but the diamond market's not keeping up with that? You're framing, like, when is the frame worth more than the piece? Do you see what I'm saying?
Yes.
Okay. So here's the problem. Rough and lab have the same problem. Neither are resilient to market pricing. They just aren't. The white diamond market, volatile, always has been. Prices can drop. You buy the diamond, you walk it off the lot, as it were, and bang, it's basically not worth anything what you paid. So people make the economic decision to say, well, why don't I just buy a lab grown?
That's right.
Well, here's the thing. Why don't you just buy a yellow diamond? Because for almost the same price, for a fancy yellow, you could wear a natural fancy colored diamond, which is distinct. It's incredibly rare. No one's gonna make the distinction, or gonna say, well, that's a lab grown. They just won't, right? So if you have lab grown whites that look better than your natural whites, why bother? Why bother with any of it? For the same price or a little bit more, you could buy a price resilient asset, right? Why throw the money out the window? I don't understand. Why wouldn't you buy an asset like a fancy yellow where there's 150, 200 a year come to market that are internally flawless?
Exactly.
It seems such a no-brainer that if you love someone, You don't give them a fake watch. You don't give them a fake purse. You say, sweetie, you're the best. I want you to have the absolute best. I want you to have something that is as different and beautiful as this diamond right here.
Right? Boast about it 10 years from now, 15-year anniversary, 20-year anniversary. You can still boast about your wife and the ring at the same time.
You might just boast about the ring. Who knows? But no, the thing is that ultimately, look, again, the yellow diamond market specifically, we're not talking about pinks today, but the yellow diamond market is so distinct because the market is resilient. It's super rare. There's no question that these are natural and quality, that it just seems to me that that's where the market will go. Because if you have a little bit of knowledge about the market, you'd stay away from lab grown, and you'd stay away from, lackluster quality white diamonds too.
And then
you own the color diamond that is rare, that is high quality, that looks beautiful and different and separates you, right? Why would you not want that as part of your story? Why would you get bogged down in the mud of this other type of products? Now, what we're really good at, Jerry, is tracking down not just, your typical 1 carat fancy or fancy intense yellow diamond. For us, it's got to be internally flawless, unless it's a vivid, maybe then we might go down. We want shapes that you just don't see. If it's an emerald cut, if it's a pear cut, an oval, we're looking for things. We've always looked for things that were different. But then we're also we're not making concessions. We're not saying, well, if we get a shallow diamond or a deep diamond, we can save a bunch of money, but we can we're not passing on the savings to the client. That's what jewelry stores do. They make concessions, but don't pass you the savings. We've always focused on hyper quality, the absolute best luxury items that you can buy. And what you get as a result is beauty. You get resilience in price. You get something that you could be proud of. You're going to be talking with your hands.
Yes.
Okay? You're going to be someone that all of a sudden you're talking with your hands. Oh my gosh, you're going to say, constantly putting your hands to your cheek, going, oh my gosh. Oh my, and then just turning your cheek a little bit to point the diamond in the way of your friends. Oh my goodness, look at that. Oh my God, what did Carney just do? I can't believe it. That's your yellow diamond market. I know that that's where the market's going to go to, and I think it's just a matter of time before the jewelry stores figure it out. But by the time they figure it out, they're going to be buying, SI quality yellows. That's what you're going to be getting from them. And those don't have the same resilience as the high quality, high clarity, etc. We've got some other big news in the diamond market.
Sotheby's this week will be offering a pink diamond ring, expecting to achieve around $20 million at its upcoming jewelry sale in Geneva. Now, it's a $20 million pink diamond ring. It's called the Glowing Rose after its luminous and pure pink color. The diamond was set into a ring by Boodles. The diamond originated from a 21 karat rough recovered in Angola in 2023. The ring could score well above its estimate in 2022. The Sotheby's sold the Williamson Pink Star, an 11.15 carat fancy vivid pink internally flawless diamond ring. So we're going to be keeping an eye on this auction, as we always do, to see what what is on vogue, what type of shapes are popular, what's in season. But this is where Guildhall fits in. This is where we come in. Gold's rise obviously confirms the tangible asset story. Pink diamonds alike represent this pinnacle as well. Recognized a store of value, recognized as also inversely correlated to currencies that are going to be smashed. The cycles are coming. And when your silver and gold, the strategy is when your silver rises, there are ratios to take advantage of back into gold or into a natural fancy color diamond by Guildhall. At Guildhall, we spent over 2 decades helping investors access these elite investment grade diamonds all authenticated, GIA approved, praised and selected for long-term appreciation to feed into your generational wealth story, to feed into your family, and to be able to boast about something 10 to 15, 20 years from now. Give us a call, find out. You want to request your Guildhall Investor Kit or take part in your own diamond discovery session. You want to give us a call, 1-8778-SILVER, and the website, guildhallwealth.com.
The big news this week is that JP Morgan analysts are forecasting that gold could surpass $8,000 by 2028. They're saying it's going to be driven by increased investor demand for the metal as a hedge against equity market risks and broader portfolio diversification trends. So, look, this is a very good thing when the entities that have helped to suppress the price of gold and silver are now telling you we think it's going to go higher. And by the way, there was always a lot more money to be made to the upside. And this, God rest his soul, Ted Butler, this is what he would always, he always said that. He said, JP Morgan will one day say it's going higher because we have it all, right? And now that we have our chair, let the music stop. And, that's what's happening in the markets. People are catching on. They want the physical. They see it's rising. Countries are buying it. You have central banks buying physical gold. They continue to buy physical gold. And as they've been buying physical gold, it continues to be revalued higher and higher and higher. At the beginning of the year, the gold on the Treasury's balance sheet, if they were to revalue it, was worth $800 billion. Today, it's definitely worth north of $1 trillion. Well, soon it's going to be worth over $2 trillion. And this is the trend. If you're a central bank and you want to be successful and you want to make your debts look smaller, have assets that are growing at a much faster rate than the debt. It's as simple as that.
Simple as that. We're also following this week, huge story out of India again. Another major headline that India is adding silver to their reserves, remonetizing silver as it once did in the early 19th century. Also, the Indian Diwali silver frenzy, 1,000-ton buying wave in silver, 50 tons of gold in just one holiday season. What's that going to look like next year when there's so much deficit coming out of the ground year over year, 6 year structural deficits? There's not enough silver. November 9th, we're still having that review. A confirmation is coming up regarding the critical minerals list pertaining to silver and others, but obviously all eyes are focused on the silver market. If you look at that list, Jeremy, you see tungsten there. But why is silver not there in your good old friend tungsten?
But would it matter if they didn't say it was critical? Because at this point, it's already been recommended, right? It's already been recommended to be a critical mineral. We know that miners in Canada have petitioned the government to say that it is a critical metal. So the industry knows it's critical. A rose by any other name kind of thing. Mm-hmm. So ultimately, I don't even know if it matters. Because when you look around at what's happening, I don't think a central bank cares if gold is called a barbarous relic or a pet rock because they're buying it.
No, these precious metals have outlasted all types of name calling and narratives. It will outlast whatever it's going to be called tomorrow because they don't change. Their attributes have never changed, that they're scarce, divisible, recognizable, durable. This is what money is, what money has been for thousands of years. Your paper money, your paper ETFs, you take delivery of something. You own the physical. If you cannot hold it, you do not own it. Your paper money eventually returns to the intrinsic value of zero. This is insurance against inflation, number one. This is insurance and also your rebate, because where the trends are going, if you remember, but Francis Hunt, back last month, did you see what he called for?
No.
The silver price to hit $330.
Who's he?
Francis Hunt. Highlights a massive.
Who's Francis Hunt?
Isn't he like one of the Hunt brothers' cousins or something?
Okay. We'll look it up.
I have to look that up. But he cites the technical levels and the beautiful cup and handle completion. Now, this is a 50-year chart, obviously one that is a very strong, and it's a chart that Michael Oliver also cites as well in his MSA material. Silver's officially triggered a massive quarterly cup and handle breakout. Quarterly. Projecting an unprecedented target of 200 to 300 per ounce. This isn't just another market move. It's the beginning of a wealth preservation exodus from a collapsing debt fiat system. And unlike 2011, silver is now facing at the epicenter of a green energy and technological boom. So this is the topic that a lot of people come up. They ask, can it be similar to 2011? Not when you deem this thing and designate it to be very critical to these resources, to these industries that are so reliant and heavily dependent on silver. Silver's just going to stay there.
Francis Hunt is the founder of the Market Sniper. He's an analyst in the market.
Love his name.
Yeah, great name. If you've missed an episode, catch us on YouTube, catch us on Rumble, follow us on X. Let us know your thoughts, please, in comments, etc., so that we can engage and bring your questions to the show as well. Want to congratulate everyone who is involved in the market and look forward to speaking to anybody and new clients who are looking to get involved in the market. We love assisting clients get involved. The number 1-877-8-SILVER, the website guildhallwealth.com. Thanks to all our listeners for joining us this week, and can't wait to speak to you next week here on The Real Money Show on 640 Toronto.